Hey, this is Justin from nextbigtrade.com. Tonight I want to talk about two major ironic aspects to the gold market currently. The first one is how bearish the media and many analysts of the gold market have stayed to gold, considering the fact that gold still has not made a significant major low since the 2013 low back in June of 2013. You can see on this chart that gold hit 1179 back in June 2013 and today closed at 1183. So essentially we've gone sideways, in the price in gold for almost 2 years now, yet the negativity on gold has maintained all during this time. It is true that each rally in gold has failed since then, but on the bear side, the bears really haven't made major gains either because gold has repelled lower lows each time it has retested 1180 or so, or back in late 2014, and just recently it made slightly lower lows, but not significant lows compared to all the damage that gold went through back in 2000 or early 2013. So the media really has maintained bearishness while gold has in reality been in a giant basing phase. And the second ironic aspect of this is that the longer this basing phase goes on, the more bullish it actually becomes for the gold market, because people that follow cycles and things like stage analysis know that markets go through bear markets, basing phases, and then eventually break back into new bull markets. And the longer this basing phase goes on, the more likely we're nearing the eventual transition point back into a bull market. Now, just to go back into sentiment for a second, I mean, in gold right now, we're really in the despondent or the depression phase where everyone's essentially given up on gold. If you look at this definition of despondency, it's talking about how after exiting, people never want to get back in ever again. But ironically, this is one of the most profitable times to be entering a market, is when everybody has given up hope and has left. And secondly, being in like a depression type of phase too is where you're second guessing yourself, and you just don't think that you did the right thing, and you don't have a positive mental aspect on what really could happen in the future. But ironically, the next step toward after this give up hope phase is a renewed hope and a new uptrend eventually. Now, here's an example of how the media still wants to stoke fear into the gold market, and I got a kick out of this article this morning on CNBC. It's titled, "Here's Why It Could Get Way Worse for Gold." Um, CNBC has loved to really make fun of gold over the last couple of years, but this is a great one. CNBC says that with this minuscule 1.25% drop, gold has given up all its gains for the year. Big deal. But they go down and talk about how the like flawed logic here. They say that even though many gold buyers are from Asia, they still somehow buy their gold in U.S. dollars. So somehow, which they say it's more expensive for them if they're buying it in U.S. dollars but live in Asia. But in reality, anybody that's buying gold in U.S. dollars should be able to get more gold than they could with other currencies, because gold, the strongest currency against gold, is the U.S. dollar. So even if these people were making money in Asian currencies and buying gold in dollars, after the conversion, they would still, have the same purchasing power essentially that they had with their Asian money. So, this is like the example of just bringing up a flawed scenario of logic to cast doubt on the gold market, and that's what the media does in these late bear markets is they still try to stoke fear into people that read stuff like this, because they know that these people are still depressed and think that another plunge in gold could be around the corner because they haven't seen anything else for so long. They're still in like the give up hope phase in gold. Another great comment in this article was down here where this technician says, when the dollar really does break higher, I mean, I don't know where this guy's been, but the dollar has already gone up in a crazy parabolic ascent. Um, so he must think that this parabola can go on forever. But he says when it really does break higher and the Fed raises rates, this is the thing that'll finally push gold down to the downside again. And he says for traders, gold is a great trader to the downside. It tends to be very deliberate, very tradable. Which, if you go back to the chart, is kind of a funny saying, because gold really has just been whippy in the last 2 years. It really hasn't, um, trended in a downward direction this whole time. It's probably given a lot of false signals to bears and blown them out of their positions. Um, here's a couple of more examples of negativity in the gold market, and this is even appears on gold websites. Here's this guy, you know, a few years ago used to write more bullish articles on gold, but now he's writing about how gold and misery go together, and most of this entire article, which appears on a major gold website, is extremely bearish. Here's another example of a guy who's writing about gold on another gold website where he's saying precious metals are truly evil. This is cookie cutter stuff for what kind of things you see in a bear market, and in late in a bear market, such as we are now, is pretty ironic because um, you know the metals really haven't been that bad to people on the long side for 2 years now. You've had just flat losses or gains, but he still thinks metals are evil. Uh, Now briefly, I want to look at GDX. I mean, GDX is telling the same story as gold. This is a gold miners ETF. Back in June 2013, it hit about $22, and now it's right around $18. So it's down about 20% since the middle of 2013. But the significant losses occurred during the stage 4 phase, when it went from the mid 50s all the way down to the low 20s. So again, the gold stocks are displaying a basing phase here, which has been going on for about 2 years. And one other thing to note is that late in basing phases, when sometimes you'll see an increase in volume, and that's actually very bullish, because this signals that supply and demand is changing hands into strong hands a lot faster down here, because all these shares are being traded, and this is setting up an even stronger base right here, from which as soon as more buyers finally come in than sellers at higher prices, it'll launch it back into an uptrend. So to conclude this talk, the longer gold stays in the stage 1 base, the more potential it has for a stage 2 breakout. So while everyone remains extremely bearish on gold and doesn't want to look at it anymore, people that understand stock market cycles can put gold on their radar and just continue to watch it, because the longer this thing goes on, the more the potential for the future as far as a new bull market.